is Monday morning, 1:25, and here we are. Markets are open. We're live here on our halftime report, Tackle Trading's daily show, where we go through the stock market charts, news, information, stocks, companies, anything grabbing our attention that we feel like we've got to analyze, give you guys some insight so you can better run your daily routine out there as a trader. If you are a veteran, you know what I'm going to ask you for right now. Hashtag Team Tackle in the chat as you're coming into the show. Let's have a lively, fun conversation here today. And if you're brand new to our channel, welcome out. We do this show every day. The markets go live. We go live 12:30 p.m. Eastern Standard Time. And we'd love to have you join us. Subscribe, click the bell, come back on a daily basis. Got Matt on the back end running our screens here and, doing the chart analysis. Mark providing insight and analysis as well. I am your host, Coach Tim Justice. Let's go. Let's rock and roll here, boys. Let's start with you, Maddie. How are you doing today, first off? And pleasantries.
Pleasantries are fantastic. I like that little awkward silence there at the first, Tim. Tim, I'm doing absolutely fantastic. Excited to be here, break down the market activity this week. It's going to be a compelling, interesting week with a lot of earnings coming at us. And outside of the stuff happening on Gamestop and some of those smaller areas of the market, pretty normal market right now today.
There are some wild storylines in the underbelly, and we will talk about them a little bit later in the show, obviously. I mean, they're catching the headlines and all that kind of stuff, and they are at least noteworthy and interesting. So we will go look at that GameStop chart and take it and have a conversation about it. I don't know if anybody knows this or not. You have a failing company that just went from $20 to $160 intraday in the last 10 trading sessions. We're going to go and look at it a little bit later. But let's start with the broad markets, Matt. We've got a very, very busy week of earnings. In fact, one thing that I was looking up, 1/5 of the S&P 500 companies report earnings this week, including Apple, Tesla, AMD. We're going to be doing some earnings previews. We'll talk about those companies that are noteworthy throughout the week. But, as you're reading these technical conditions, little hesitation, couple of red candles, but we're holding the 9 EMA. We've got a beautiful trend in these markets the last couple of months. What's your read on the market right now?
Pretty technically on the market is the continuation of the trend that's been happening really since the election happened in early November. Obviously, the momentum has shifted to more of I don't want to call this a worm burning type chart because it's not that. It's got higher highs, higher lows. It's kissing the 20. Every time it gets between the rising 9 and the 20, you see support form. But it does have that worm burner kind of feel, that grindy market, that slow, methodical market where you have this price appreciation over time, but there's not this strong movement one way or the other. But again, that's all relative to what we went through in 2020, and that's all relative to the price performance in the first 2 weeks after the election, which also included, Pfizer Day, vaccine day that happened after the election as well. And so you do see the continuation of that slow, methodical, grindy market that we've been seeing, really kind of develop over the last month and a half. And right now in front of earnings, you got a little bit of hesitation. Last week, we did see the breakout of and the continuation of the trend last week. At Tackle Trading, we rank all of the sectors, the major market index, i.e. the S&P 500, every single week, and we have it right there at the 20-yard marker in our newsletter. And we had it there last week. We had it there the week before that as well. Even though the market continues its trend, even though the market continued the breakout, typically on a breakout such as the one we had last week, I don't want to say typically, but most of the time we do see an increase in the ranking at Tackle Trading. We kept it at that 20-yard marker this week, despite the price appreciation last week, despite the breakout last week. And the reason very simply is this: we didn't see an extension of the momentum in the market. We saw the market continuing to just kind of hug that 20, hug that 9 EMA. Even though we liked the breakout, we didn't really see a big, follow through on that breakout. And in recent history, that's kind of what we've seen. We've seen the breakout, consolidation, breakout, consolidation, breakout, consolidation. And so even though we broke out last week in the S&P, you're not seeing that momentum carry on. And it's understandably so. I mean, we're in front of some major earnings reports that, even though there is some front running happening in the Apples, the Facebooks, and the Googles of the world that are going to be reporting earnings, you're still not seeing this this market kind of go simultaneously together. And so it's a little bit of a fade action. We wanted to keep that 20 ranking to respect the fade action, but we also wanted to keep it to respect the fact that you do have 115 S&P 500 companies. S&P 500 companies, over close to 25% of the entire S&P 500 is reporting this week. And we're not talking small names. We're not talking one specific sector like we were talking 2 weeks, or a slew of other reports that really didn't have a major impact last week, outside the Netflix. You're talking the Apples of the world. You're talking the Microsofts of the world. You're talking Teslas of the world. You're talking the Facebooks and the Johnson and Johnsons. And so when you're talking about some of those major companies, let's take a look at Apple here. In the last quarter, I wouldn't say relative to what some of those storylines in the market has been, Apple relative to that, not doing much in the last quarter. Outside of that, it's up 20% in the last quarter. Apple's done amazing in the last quarter when you're thinking about it just over a 3-month stretch. We're talking about a company that's added $500 billion in market cap that is expected, think about this expectation, is expected to top that $100 billion revenue mark that is typically only reserved for companies like Walmart and the like. So Apple, a lot of anticipation coming into the report this week. Apple's had some front running, on the backs of what happened with Netflix last week. It's up from that 125 all the way to 145 at the top end of the channel here today. So you're having some front running in Apple just in the last week in front of earnings. Again, that in large part due to what happened with Netflix last week. And you're also talking about the number one company in the market that's up over 20% in the last quarter. So can we see the continuation? And people are looking at Apple right now and being like, when's Apple going to join the parade? Apple's been joining the parade. It's been doing absolutely amazing. And when you think about it quarter to quarter, you're up 20% in the biggest company in the marketplace. You got to show me a little bit. I think the anticipation's got to be, Apple's got to come in and match the price action here. And so I do think with Apple, it's a little bit of a show me. When you're looking at some of those other stocks this week, Microsoft, unlike Apple, Microsoft's just been kind of stuck in this long-term range, and probably even more so than Apple. I'm looking forward to Microsoft this week, and I'm looking at Microsoft from a 230 perspective. Obviously, a lot of people invest in Microsoft, but when you're looking at the Microsoft, this is a company that over the last 10 years has not only reinvented its own wheel to a certain extent, has absolutely dominated the marketplace, and you haven't had a lot of longer term consolidations in Microsoft in that 10-year stretch. You had one coming into 13 and 14, 15 here where you went net neutrality between 40 and 48 for a good year before you broke out. You saw the same thing occur before you broke out again. You saw the same thing occur before you broke out, same thing occur before you broke out. You've only had 6 or 7 moments of consolidation in Microsoft's run where it gave you a really, really, really good position trader, investor, swing trader, whatever they're looking at, technical condition. And so when we're looking at the technical condition on Microsoft, given the consolidation and the time frame in the consolidation, people who like, I know with GameStop, Tilray and all those other craziness, you don't like it to be in the cooker. Traditional traders and investors, we'd like things to be in the cooker for a little bit. We like them to get perfect, and Microsoft is setting up in that environment where you have a very, very, very good opportunity with a positive response on an earnings report to break out of this longer term consolidation. Think about it from Microsoft from the market's perspective. This is the market right here as Microsoft is going absolutely nowhere. Can Microsoft, a leader in the market, can Microsoft, one of the best performing stocks in the last 10 years, can Microsoft, the second biggest company in the market today, can they break out of this lull that they've been they've basically been, singing a lullaby, lulling people to sleep, and then all of a sudden it breaks out and people are like, hey, let's go trade GameStop, when the rest of us are looking at this Microsoft chart being like, let's break out on Microsoft. You guys enjoy your GameStop. Give me this, 10 months of consolidation in Microsoft. Give me this increasing support level in Microsoft while I have a horizontal clean trigger above 232. Give me that consolidation. Can Microsoft complete the storyline this week, break out on a positive earnings report? I'm looking forward to Microsoft. Looking at Tesla, we know what Tesla has meant to the marketplace. We know what Tesla has meant to those high flyers in the past year. Can Tesla at the high price, and guys, this isn't even showing the lunacy that's happened in Tesla and the craziness in the last year. And Tesla in the last quarter, guys, we're talking about a company that's up over 100% in the last quarter. Over 100% in the last quarter. This is, again, not a stock like GameStop. This is a massive, massive, massive company that everybody tracks. Can they show me? This is a Goldman moment for Tesla in the short term. Can you show me? Can you show me that fifth consecutive quarter of profitability? Can you show me that? Can you show me that you can withstand this level of anticipation at this high of a price with this many eyes on you? This is a moment for Tesla this week. And then Facebook's going to absolutely crush their overall earnings numbers. Facebook's going to come in and they're going to report a very, very, very good earnings report. But the question is, Facebook's had a lot of eyes on it as well in recent history. Can Facebook show some love and break out of this consolidation? I don't have the same feeling on Facebook. Obviously, I do say on Microsoft, but Facebook's been held back from the market a little bit in recent history. Obviously, it's had a lot of eyes on it from a political perspective. Does that have an impact on the earnings? At some point, does the hate Facebook have actually show up in the earnings numbers? I don't think it's going to be this quarter, but that doesn't mean the market's going to respond positively to that report. But I'm anticipating Facebook here as well. So in front of this week, man, we don't have a lot of news here today, but we got a lot of fireworks getting set up this week that's going to really have an impact on this market, both in the short term, i.e. the response to the specific earnings this week, and also in the long term. Answering those questions to Apple, Microsoft, Tesla, and Facebook, I think is going to go a long way to see where we actually end up in earnings and from a price performance relative to earnings in the first quarter. And then quite frankly, Tim, we've only had 13% of companies report earnings so far here this quarter so far. Most of those in the banking sector. We've gotten through a lot of those. But out of those 13% that report, I want to give you a couple numbers real quick. 86% of those companies have beaten the estimates on EPS numbers. That is an all-time high so far. Now we're early, the same way we were early last quarter as well, but we were at 83% at this point last quarter. We're at 86% right now. Also, we're expecting a net average of a negative 4.7% decline. That will be the fourth consecutive quarter of negative earnings decline. That is a depression era type number, guys. So just a little bit of a backdrop to what we're all doing here. 86% of companies reporting positive EPS guidance. Those numbers relative to performance year over year equate to a negative 4.7% drop in earnings. That's the fourth consecutive quarter. That is depression style type metrics when you're talking about fourth consecutive quarter of negative earnings. 2 companies have issued a revised negative guidance. 9 companies so far have issued positive guidance. So we're early on in earnings season. So far it's been positive. The market response has been positive, but earnings season really, really starts this week, Tim.
Mm-hmm. And it's going to be a really action-packed week in that regard. And I love the analysis there, Matt. So many companies like Apple and Microsoft were anticipating them eagerly. And you're right, Apple did have a wonderful quarter running into that resistance zone. That breakout potential on Microsoft post-earnings is something I've been watching for a long time. Apple's already made a nice little move here. So it's going to be a fun one. It's going to be a busy one in terms of that, and appreciate the breakdown. Mark,
Apple never had a clean chart like the Microsoft chart, though.
Oh, no, not clean, just performance-wise.
Apple had a Facebook type chart.
Yeah.
Kind of a gross little double bottom. Microsoft's chart is pretty clean at the top.
Yeah, I'm excited about that Microsoft chart and looking forward to the numbers. Mark, how are you approaching earnings this week, and what are you watching for? Matt just did a really good job thoroughly breaking it down. Anything you want to add to that?
No, the one thing, the thing I'm most fascinated about is tech. We saw a strong move after Netflix last week. I think there's a rotation going on to tech that is not just a little swing. I think it has some legs, but we're going to really find out this week how much legs it has, like Facebook, Apple, Microsoft. I'm fascinated about that. I think tech has some short term in the coming weeks and maybe even months relative strength to it.
By the way, I think we just got the chat back up and running. I don't know what that was there, but welcome out Team Tackle, hashtag Team Tackle. I know we had everybody watching there and nobody was able to communicate with each other. So the chat's an important part of this show, Matt. That's got to be fixed right away. So Cody,
leave it to the savior.
Appreciate you coming in, young man, and getting that up and running for us. Good deal. And let's move through these markets a little bit more, Matt. I do want to take a look at the sectors. Obviously, technology's had a nice little bump up in anticipation of what we've been looking at. And the NASDAQ has had a great week of trading, by the way. It's up here even today with a little bit relative strength on it. Matt, can you run through those sectors real quick for us and kind of just give us your read?
Let's take a quick look at the sectors here very quickly as we're coming into the week. First and foremost, guys, if you want to check out all of the rankings and the analysis on it, please check out the Tackle Trading newsletter that we put out on a weekly basis for our pro member community. It's one of those scatter reports that Marquise Johnson does, and Marquise does an absolutely wonderful job summarizing the week that was and preparing our community for the week that is coming at us. And so definitely check out the detail that's in the scatter in the Tackle newsletter every single week. Here on a Monday, I typically just do a little bit of a snapshot. That's what I'll do here today. Mark, you mentioned technology, so I want to kind of start with technology here. Technology was right there at the 20-yard marker. It's one of the only sectors we did see an upgrade. We did upgrade a couple of sectors here. Technology was one of those. Now, the market broke out last week, but I didn't really feel like it was appropriate to upgrade the market because it was maintaining the same trend with the same type of momentum, and you had just a slew of earnings reports that are coming at it. Plus, this is not as important this week because we all know the Fed has taken a backseat to the fiscal action in recent history, but the Fed does have an FOMC meeting again on Wednesday. I know nobody cares about the Fed right now. They've only been the number one player in the history of the market in the last 13 years. We don't care about them. It's the fiscal government and getting their next edition of the stimulus, whatever that next edition. Is there anybody happier in the world right now than Jay Powell? Like anybody?
Janet Yellen seems pretty happy these days.
Janet Yellen seems very happy.
She always has that smiley little quirk about her.
Sure.
I'm just saying, like, has anybody had more pressure removed from them in the last 3 months than Jay Powell has, though?
Jay Powell's got to be feeling pretty good. Yeah.
Like, Jay Powell's in his living room these days, and he looks like spry. He looks 10 years younger. He looks like he's ready to go for a bike ride or something like that. But no, I mean, when you're looking at this breakout here in front of all of that, I had it a little bit different from a breakout perspective, whereas I saw the continuation of the trend in the S&P 500, and even with the S&P breaking out, I didn't see anything different from a trend perspective. Here you do have some subtleties of a trend change, and I do think that is important, and it's something we talked about last week, both on Tuesday, Wednesday, Thursday, Friday, now coming into Monday, about how we're seeing the market rotate a little bit more aggressively into tech outside of other areas of the market, especially after the Netflix earnings right here. When you saw Netflix up 16%, the NASDAQ was breaking out. Communications, which Netflix is in, was doing absolutely fantastic as well. We'll get into communications next, which is kind of the distant, second cousin to technology, I would say. But when you're looking at this, you do have a little bit of a subtle shift in momentum from a trend perspective that you're not seeing in the S&P. You have a double top followed by a slight double bottom. You have net consolidation over the course of a good month in the marketplace, and then you break out of that consolidation. And so because you have it consolidating coming into the price performance last week, you do have a subtle shift in the price performance, and that's why you would want to upgrade the NASDAQ and i.e. the tech space over the S&P right now. And so with that upgrade, we are upgrading the NASDAQ and specifically the tech space at that 15-yard marker, which is 5 points above the S&P. We like the price movement in both areas of the market. Obviously, earnings are going to impact both areas of the market, but because you have a little bit more consolidation, a little bit more neutrality coming into the price performance last week, you got to upgrade the NASDAQ because of the breakout versus the continuation of the trend that was transpiring within the S&P. And again, that NASDAQ breakout on the backs of what happened with Netflix last week, I did think that was a little bit of the market showing their hand, front running some of those big name earnings reports this week. We're seeing that, and we're seeing we have seen that in the last 3 to 4 trading sessions. And it's early this week. We're early here on a Monday. We got some major earnings reports this week and obviously next week as well. But we are seeing the continuation of that front running a little bit that we saw last week with Netflix continue here in the tech space as well. So a little bit of a breakout. It's volatile on a Monday. No doubt, it's volatile on a Monday, but we're seeing that across the market landscape in general. Now, looking at its twin sister in communications, where Netflix really kind of lives, same type of philosophy in communications, though you really had a little bit of neutrality. Now, unlike the NASDAQ, where you only consolidated for about three and a half weeks, you have a good 6 weeks of consolidation here in communications between 65 and 67.5. Very clean resistance channel at 67.5. Netflix obviously gap up, front running that in communications. You gotta like the breakout here in communications. We did have a 35 ranking coming into this week in communications. We are a little bit concerned with obviously with Netflix and some other major earnings reports last week, but you were also a little bit concerned that for the first time in recent history, you were closing underneath the 50-day moving average. You were violating the 65.5 historical support level, and so we did downgrade that into the 35-yard marker just to respect what we were seeing in the chart. Netflix app and reversed this completely 100%. Not only brought it back up above those moving averages, but also broke out of the channel and then consolidated at the top end of the channel. You gotta like that. Now, we did go from 35 to 25. That is slightly underneath the market. Now, if you were to poll most of the coaches of tackle trading, I'll tell you, they're going to tell you they're looking at communications more than they're looking at other areas of the market, despite it being slightly under the market. So why is it slightly under the market? Very simply this: with that Netflix explosion, you had really good price appreciation, but you got to say you're a little bit overextended in this price movement. Most of us at tackle trading, we don't love overextended breakouts, and that might be a little bit of my influence there, but we don't love overextended breakouts. You've ran pretty aggressively, 65 all the way to 69.5, 70 now, a little bit overextended. Maybe you're a little too hot in the short term. So we kept that. We did upgrade a 10 into that 25-yard marker. Love the breakout, especially on that weekly chart. If you'll take a look at the communication, you got that consolidation. Look at this. You got that consolidation. Now look at that strong candle. That was Netflix. You didn't see a lot of this on the daily chart because it gap and ran. That's a lot of Netflix. Look at that. Look at the cleanliness of that breakout. You gotta like communications here. It's a sector that we're all hotly anticipating good performance in 2021. I believe in the prediction show, it was 2 of our favorite sector coming into the year, even more than technology. Thought those brand names were going to play an important role in 2021. So far, it's early. It's very early. It's very, very early. But after what happened with Netflix, the front running we're seeing in other areas of this space, it's you got to love the breakout. Maybe it consolidates for a couple more days. Maybe we get through a couple more of those earnings reports. But as long as we stay above 67.5, 68, you got to love communications here, and that ranking is at the 25. Now, quickly going through the twin sisters in basic materials and energy. In basic materials, we did give a downgrade from the 15-yard marker to the 20-yard marker. This bullish retracement that was forming, retracements have not been the greatest so far. Over the course of the last year, we're not seeing a good pattern here in materials either from a bullish retracement. Very choppy, inconsistent consistent and inconsistent price performance in different areas of this sector also give us a little bit of concern. We know what's happening in the gold market. The fight for the 200-day moving average is real. But if you look at what would impact this sector, GDX, that fight is even bigger. And so you're really underneath all your moving averages in GDX right now. You're clinging on to the lifeblood of support in this area of the market. So when you're talking about materials, that's more in terms of those miners there. But what was more interesting to me and probably played a bigger role in the ranking was your price performance post earnings on a couple of those specialty chemical companies. Very similar to Goldman Sachs last week, where you had great price performance coming into earnings. Couple examples in the specialty chemical space where you just had profit taking off really good earnings numbers. That gave us a little bit of concern. Gold fighting for the gold, and those mining companies fighting for support, that ultimate battle of the 200, the top of the market selling off and profit taking with the specialty chemicals, gave us enough concern to downgrade this space. Now, when you're looking at this space as a retracement, this is really not a bullish retracement any longer. You've had too much consolidation at the top, and you had too much chop in the drop, and you had too much volatility and inconsistency for this to be considered one of those standard bullish retracements. I think what you're looking at, materials, right now is you're just looking at this horizontal pivot at 72.40, and you're saying we got to hold here. We got to hold here in 72.40. We break 72.40. We ultimately break 72.20, right where that 50-day moving average. The pain could get real. Right now, it's just a tickle. That's all it is. Right now, it's just a tickle. Don't love it. Don't hate it. But if we violate some very important moving averages here in the historical resistance levels, it could get ugly in the short term for materials. So keep an eye on that. We will be tracking that every day in the halftime report. Twin sister in the energy space here, Tim XLE. You got this more traditionally as a bullish retracement. Again, materials and energy. Although energy has traded to its own beat over the last few years, they do have some correlation status, and I do have these markets getting back down to more normal mechanics, unlike in 2020, and you're starting to see a little bit of similar price movement in materials as well as energy. However, the difference is you got this as a little bit of a cleaner retracement. You got this as a bullish retracement fighting for support at that standard 20-day moving average. Let's see if we can confirm. Ultimately, confirmation needs to get back up above 42. If we can get back up above 42 in the sector, I'm willing to bet there's some really good components out there that will be confirming on bullish retracements as well. Maybe some in the high base category in the sector. We do have both high bases and bullish retracements forming in the energy space. These charts are a lot cleaner than the actual basic material charts coming into this week. So let's reclaim 42 on the energy space. We reclaim 42, which would be an intraday pivot confirmation. It's also your pivot point on confirmation from a trend perspective and the continuation of the trend. So again, don't want to be catching a falling knife here and don't want to be buying at the bottoms, but give you confirmation of 42. You should have some clean movement in the energy space coming into this week as well. Moving very quickly through the rest of the aggressive sectors, finance forming a bullish retracement, very similar to what we're seeing happen in the energy space as a whole. Industrials really didn't see any type of upgrade or downgrade. We have this as longer term consolidation. If it stays between 90 and 86, you're going to see a very similar ranking in industrials. And so we've had that 25-yard marker ranking in industrials for the better part of the last 3 weeks. I don't see us changing that unless we see a breakout of 90, and probably this high is pretty clean at 90.70 or a violation of that historical support level at 86. Outside of that, net neutrality in the industrial space. Your last two aggressive sectors out there would be healthcare. Healthcare forming a high base with momentum on the 9 EMA. Definitely keep an eye on the healthcare space this week, especially with the breakout here. You've had consolidation over the last week and a half. It's really riding the thunder, riding the lightning there on Mark's girlfriend, the 9 EMA. It just really intraday holding that support level right there at 117.40. You break out in healthcare, what I'd be looking at, those pharmaceutical plays, those biotech plays this week. When you looked at the industries when we were in the scatter report meeting, it was those areas in the market that were setting up. It was those areas of the market. Once again, biotech, pharmaceutical, again, those are ultra aggressive areas of the healthcare space, but that's what's setting up. Obviously, anybody that trades healthcare knows how aggressive pharmaceuticals trade with caution there, but that is what's setting up in that space. And like I said in the scatter report meeting, and like I've said for a long time, I'm not going to bet against the American consumer until the American consumer shows me they don't like to spend money. They love it, and you see the continuation of that. A little bit of increased volatility at the top end of the channel here today, similar to what we're seeing in the NASDAQ, but overall trend pattern are secured, and it is a highest rated sector at tackle trading right there at the 10-yard marker is discretionary. Healthcare is at 15, basic materials now at 20, finance at 15 now, technology at 15 now. It's going to be a fascinating week in front of earnings, Tim. But your three defensive sectors there, yes, I do only categorize three defensive sectors because that's how they perform historically. Consumer staples showing a lot of love here today. I don't see a lot of love other than just bottom feeding here. Don't see any real trading activity. Real estate, it had a great week. Have fun, good luck. It's boring beyond boring. And finally, utilities waking up to some love here today, but I don't have a lot of interest outside of one utility stock that's on the stock report.
Yeah, that NRG play actually was really clean, and I liked it as well. It was the one component in utilities.
It's a good high base breakout.
It sure
Put it on
was.
the report, and that's why you go to the scanner reports, because we do your job for you from a weekly preparation perspective. We looked at every utility chart in the market last week, Tim. This was the best one. This was the clean one. This was the momentum one. So Tackle Trading Pro members, they don't have to do all that work. We do it for you. This was the pick.
We call it bird dogging at tackle trading.
It's bird dogging for a reason.
The essence of what we're doing there from those reports. And by the way, definitely on a weekly basis, go and review the newsletter, go through the reports, attend the Sunday night prep show, and show up to this show on Monday morning so that you can attack the markets with the information. Matt, that was a really thorough and very, very good job analyzing and detailing the sectors. I'm sure we all appreciate that. I know that I do. Mark, let's bring you in here next as we go through commodities and have you kind of analyze what you're seeing out there. You run the commodity report over at Tackle Trading for the last couple of years. Crude oil first, Mark. What are you watching for in the price chart? Anything you want to update on crude oil?
No, I think crude oil is taking a nice little break after, it's been a nice run. Ever since you had the vaccine news on Pfizer, that was a genuine theme that sent crude oil on a really huge, when you're talking 25, 30% gains in a couple month period in crude, that's massive. That's massive. Not surprising it's taking a little break. Now, energy stocks in this rotation that's been happening to tech, or this overperformance, whatever you want to call it, energy stocks have been getting beat up pretty good the last 3-4 days. Crude has not, though. So some of those energy stocks, and if you pull up any of them, like XLE, BP, you pick, pretty similar charts everywhere. They've been getting beat up pretty good. I think there might be a pullback opportunity at some point once you see a stabilizing. Always wait for a technical confirmation and all of that good stuff. Don't catch a falling knife. But energy stocks far underperforming oil itself, which is in a nice consolidation pattern right now.
What about gold? Gold's doji in here today. It's been battling. It's been fighting. Let's take a look at the gold chart. Metals markets here, Mark. What are you seeing in gold? What are you reading? What are you waiting for?
That is just a classic pinchy type situation where you have moving averages on one side, you got support levels. The one thing I have loved about gold over the last 8 weeks, and it's provided a really good cash flow environment, and the thing that's given me confidence are those clean bounces off the 50 weekly moving average. You had a to the penny one a couple months ago. Last week came down, tested. You're just in a consolidation pattern right now. And in the commodities report 3 weeks ago, when we broke short-term support, I just was very clear. It's like, this is going to be a cash flow environment for a little bit on gold. That's just, when you see this song and dance play out time and time and time again, you get used to playing the song and dance. And giving up that upward price appreciation when you get a technical signal of weekly support breaking like we did 3 weeks ago, it's set up for a nice cash flow environment in a lot of different areas of gold. It's played out that way. eventually something's going to break here. Eventually something will give and a trend will start. But commodities can trade sideways for a very, very, very long time, and learn to cash flow, and you can take advantage of those situations.
And from this gold chart, Matt, you got to like the defense that's been playing on this 50 weekly moving average the last couple of weeks. I mean, we talked about 10 days ago, I think, when it was coming down here, testing it. You and Frank on that one Friday's halftime report 2 Fridays ago, we're detailing that, and it's really kind of played that defense, Matt.
I mean, go back to the March lows.
If I have to teach the importance of trench warfare of World War I to the 200-day support bounce, then yes, that's what should happen. Yes. When an attack happens on a defensive nature, you play defense. That's what's supposed to happen.
Trench warfare. You're making me think.
I've given the World War I trench warfare analogy on the 200-day.
It's the line in the sand. That's right.
It is the line in the sand that if you lose this defensive posture, it's over.
Yeah,
it's over. They're coming home. They're coming for the women and children. You got to fight. I'm giving the speech. I'll give the speech right now. I'll get you all motivated. Let's rock. Let's roll. I'll general patent this.
I don't know. I don't know if I need General Patton on a Monday morning over coffee. I mean, it might be a little bit more
That's
of a
when
Wednesday
you need
rant.
General Patton.
It might be more of a Wednesday rant. I'm not sure. Maybe Monday's the right time.
I'm just saying I have it in me. That's all I'm saying. You pick the time, buddy.
Yeah. But anything you want to add to gold here, Matt? In terms of the chart analysis, yeah, it's kind of hanging out a little doji here today. You got to like the defense recently, in my opinion. Let's take a look at the dollar. More currency analysis later in the week, obviously, when the FOMC does meet on Wednesday. We don't anticipate much there like we've talked about. But you're right, though, Matt. The Fed is the most important driver of these markets over the longest period of time, something that we're going to have to pay attention to. Mark, is there anything you're watching from the Fed this week or even just currency markets in general that you're anticipating from that meeting? Are you looking
I think everybody, listen, every Fed meeting or every time Jerome Powell speaks from now until the end of time, you're going to watch. I don't think anybody expects any deviation from the normal song and dance he does. And his big line lately is, listen, if we ever do anything, we will let you know far in advance. He'll say that again this week because he doesn't want to spook the markets. He wants to reassure the markets. And so you'll hear that line again. And as long as you hear that line, of course, people will read in between. But I think it's going to be a non-event. But of course, you watch because it has massive implications everywhere. If he ever does one day give that, we're thinking about maybe 8 months from now doing something, right? Market's going to react that day. And so you watch, you pay attention. But, it'd be shocking, right, Matt? I mean, can you see Jerome Powell saying anything out of deviating from the normal speech this week?
Do I see anything happening with James? No, I see more happening with my conversation with James than I see with the other dude.
With Jay Powell?
Yeah, Jay Powell's not doing anything.
I don't think so either. And obviously the dollar's kind of stuck right here.
Jay Powell might be drunk for the meeting. He's so happy that the pressure is being I think Jay Powell's in a perma drunk stage right now over the last 2 months.
Jay Powell's down.
Breaking news, tackle trading. Jay Powell's been perma drunk for the last 2 months. Nobody is happier in a pandemic than Jay Powell.
Celebrating.
Finally, the fiscal government takes the pressure off us. He's the happiest person in the world right now.
Yeah. I don't expect much from the Fed, but we will talk more about it on Wednesday. Obviously, when it happens, give you guys the detail, what we're seeing once the reaction happens as well on Thursday. Quick peek at Bitcoin. Not much in the chart, by the way, guys. It did try to hold that 30,000 level here the last couple of weeks, but the charts are pretty messy here in cryptocurrencies. By the way, Bitcoin wallet's kind of hanging out in between this 35,000 level that's been bouncing back and forth. Ethereum, the second largest cryptocurrency in the marketplace, did hit its all-time high over the weekend as well. So you're still getting action in the crypto space. You're still getting, some juice there. Mark, what's your read on Bitcoin right now in general, and how do you interpret this price action?
My favorite thing right now is message boards on Ethereum lovers making fun of Bitcoin lovers about how much smarter they are.
Are we having a crypto crime here?
Oh, we're having some major Ethereum, Bitcoin, crypto crime.
Okay, crypto. Who's your enemy, crypto? Who's your enemy? Tim,
not other
you're a fighter in this area.
Sure.
Who's the enemy?
Government regulation, probably.
Is Ether's enemy Bitcoin?
No, they're
Stop
buddies.
the jealousy, brother and sister. Like seriously, cheer on your brother, cheer on your sister. What's going on here? It's
Mark,
ridiculous.
are you getting pulled into these
Ether
arguments?
hating Bitcoin and Bitcoin hating gold.
Listen,
same team, guys.
Listen, I will make one post on a stock message board the rest of my life. I'll be on my deathbed and I'll be like, it's been fun. I don't post on that stuff. I don't get engaged in that stuff. I just enjoy the show.
I think it's easier to get into political commentary than it is crypto commentary right now.
It's so silly, though. I mean, Ether and Bitcoin, you are right, Matt. Brother and sister, they're going to move together. They're identical.
They're not even cousins, bro.
Yeah, no, they're brother and sister. So
they live in the same household due to the pandemic. What are we doing? You're friends.
Yeah.
You're friends.
It's a messy chart here, guys. Is there anything here that we need to be paying attention to, watching, significant?
Listen, I mean, I have this as a broad range until otherwise. Listen, you got, between that roughly 30 and 40,000. I mean, you've seen this a lot in different charts and solar charts and clean energy charts. Big run up, massive consolidation before making a move. So, until you see something break, I think you're going to have a lot of back and forth price action.
Yeah. I've kind of got it neutral here. The short term, just kind of volatility and wait and see how it's going. Matt, what's your read?
Outside of day trading, I think there's a pretty good day trading setup happening above 35,000. But again, that's the combination of trends and patterns from an intraday perspective. But I do like it above 35,000 from a day trader perspective. Outside of day trading, there is literally nothing to see here. This is something that's setting up on the weekly chart, and you're going to allow it the time necessary to set up on the weekly chart. That could be coming up fairly soon, guys. The volatility is subsiding, and again, it's early on a Monday, but give it throughout the week. But again, I do like it above 35, and I do like it playing to 40 in this environment, but I wouldn't call that a breakout. I got this as wide range neutrality right now.
Yeah, I kind of have the same as well.
But again, I do like that trade above 35K.
All right, guys, let's move into stock talk next and have a discussion about a couple of companies. One thing that we're going to do today as well is Mark's got some penny stocks he's going to show us a little bit later in the show. I think you're calling it pinching pennies or something like that.
Pounding pennies.
Pounding pennies.
Pounding pennies.
Mark's, and what's this segment, Mark? Brought to you from cheap traders under $5. Is that what we're doing?
Hey, listen, all I know is stocks under $5 have outperformed every other segment of the market this year. So
euphoria. So we will look at some of the,
is that supposed to convince me that that's good for the market? Like,
just fact.
Am I supposed to golf clap somebody? Like what am I supposed to do here? What's the normal reaction to this? Like,
Matt's disdain for stocks under $5 goes back years, long before this recent crazy euphoria.
Oh yeah,
right? Matt's like, no.
We'll see if you can catch our attention a little bit later. I know that you've got a couple. We'll see.
I'll keep an open mind. I got a tough audience in YouTube. I got a tough audience in YouTube.
You have your audience in YouTube. I'm not keeping an open mind, but I'm going to enjoy it.
But before we go down that path, though, there are a couple of companies I did want to talk about here today. And in terms of news and whatnot, I think we got to look at GameStop and have a conversation. I know it's crazy. I know it's wild, but this is something that is quite frankly just unbelievable, in my personal opinion, what's happening with the volatility around some of these short selling firms that are being, having to capitulate and buy back their shares at such a radical way. Is it back open for trade right now, by the way? I know they stopped it earlier. Looks like it's still.
I think it's rocking. It's trading.
It's trading.
Yeah, it's recovered off the lows.
Matt, how do we interpret this? Because there's no news. There's nothing here.
There's nothing to learn here. At least I don't know if there's anything to learn here. Don't short shorted interest floats when they break out of trends. What's the rule here? Was anybody looking to short GameStop at tackle trading in the last 5 months?
I don't think so. It's not even been on my radar at all.
So I don't know. I'm not learning anything from GameStop, but again, this ain't my area of the market that I like focusing on. I'm sorry. This is crazy train analysis.
It's completely crazy train. In fact, the intraday, I mean, we went from 160 to $80 in like 10 minutes earlier today.
Well,
You know,
and just so we're clear here on what's creating this before, like, I do think there's combinations, but I do think the biggest thing happening here is short covering.
Mm-hmm.
And the speed of the short covering, given the volatility, is beyond anything we've really kind of seen in recent history. And that's including some of the craziness we saw last year. This is a failed business model that has failed to adapt to the online model, that at no point in its history in the future, and I don't care however long you date that future, will ever justify the current price that it has today. So if y'all want to chase dragons and dreams and glory, have fun.
Yeah. It literally is just a gambler's
If people
market right
need to
here.
find like, listen, I'm sure there's a lot of content out there trying to get people to chase the dragons and glory of dreams and everything. I get it. Go chase it. I just think there's much better ways to approach the market than chasing what's happening in GameStop.
It's wild. It's absolutely wild. It's
Good
nuts.
luck. Good luck on a company that's pricing the at-the-money straddle like you're buying the stock price.
That
Good luck.
the option chain right now is insane to me. The fact that you have to pay $50, $60 for the at the money straddle 25 days out, they're literally pricing in almost the entire price of the stock's volatility.
They're pricing in over 50% volatility in the next 4 days.
4 days.
In the next 4 days, the at the money straddle is $38. The stock price is 73. And I'm sorry, that's lunacy. That's absolute. That is batshit crazy lunacy, peak euphoria, and quite frankly, I think a lot of people need to lose a hell of a lot of money so they stop this behavior. This is craziness.
Yeah.
This is a failed company, ladies and gentlemen. Failed company. You don't want to be the back holder here. What are you going to do? What do you guys think GameStop's really going to do here? What do you think they're going to become here? You're never going to go to GameStop online and download digital copies of games. Not in competition with Steam, Curse, Twitch, let alone Activision, Take-Two, EA, Microsoft, Apple, Google. Come on, get out of here with that stuff.
It's silly to even try to wrap your head around what the business model would have to become to try to justify
If GameStop gets everything right perfection wise over the next 10 years, it wouldn't justify the price today.
That's right. That's right.
It's lunacy.
Mark, anything you want to throw in here?
No, dude, it's just one example of so many things in the last year. This market is what it is, right? It's my favorite market of all time, but I'm not short GameStop today. So
Of course not. Yeah.
No, listen, if you made some money here, awesome, congrats, love it. I love when anybody makes money, but I agree with James. Take the profit and go buy a better company.
Take the gift if you
Take the gift. You need to recognize when the gods give you a gift and the trading gods are giving people a gift. Take it and run. It cannot be sustained. Somebody's going to be leaving billions of dollars in bag holding here. Don't be one of them. I don't care if you say, oh, it's only $200 or it's only $2,000 or it's only 20, whatever that only number is for you. I don't care. Bad behavior will lead to bad results.
Mm-hmm.
Take the gift. Go park it in Activision and Lord Almighty, go park it in Activision. ATVI, it's a better company at the better end of the chart with actual fundamentals, with a good valuation and right covered calls against it. Cash flow compound. Thank me later.
Now you're going to make me do something. I got to look this up.
Yeah, you're going to go buy more shares of Activision. What you're going to do? Finally, Tim's going to lock in his profit from his lunacy on GameStop.
Oh, I haven't been playing GameStop at all. It's a popcorn chart for me. It's just one you watch because it's fascinating just watching the volatility, but it's not something I touch at all.
Oh my God. Oh my God. No, it's not a war. There's nothing happening on the social conscious waking up and we're going to go to war with the hedge funds and guys, anybody that wants to fight Wall Street, good luck. You're going to lose. You're going to lose. What's happening in GameStop is not due to 92,000 people going across and message boarding each other about how they're going to beat Wall Street. Beating Wall Street is over time, not in a week. Wall Street has the ammunition and the arsenal to withstand anything you think they can. They laugh. You think it's a fight? They're laughing at that fight. It's not a battle.
They have more money and more time. They have a lot.
Why? Like, who's crowing about GameStop right now? You triggered a short covering. That's it.
Yeah. Yeah.
Should we
Yeah.
also crow about Tesla's short covering over the last year?
Oh, Tesla
Yeah.
fans have been crowing forever. They're never going to stop crowing. So
Listen, I'm not going to stop talking about the lunacy in GameStop until you change the subject here, bro.
well, let's move into penny stocks. There's not many.
Can I do a couple earnings very quickly?
Yeah, absolutely.
Okay, and then you can do pounding pennies with old Chucky.
Sure.
I'm interested, Mark. I want you to convince me on a stock today. Very interested. Let's start with Bro. And the reason I want to bring up Bro here today, and again, I'm not going to be covering in earnings this quarter. Obviously, I'm going to cover the major ones, right? But I'm not just going to cover the top market cap ones. I'm going to cover ones that I think are setting up maybe relative to an industry or a sector or its individual stock performance. The reason I bring up Bro here today is Bro is a fairly popular cash flow company. It's also setting up in a longer term channel right south of $50 that could be important. Bro does come in at 52 cents versus the 42 cents on expectation. They also beat on revenue at 674 million versus the expectation of 643 million. I like the beat on EPS. I like the beat on revenue. But what I really, really like here is the potential of a longer term breakout here. Nice little long term cup and handle. Got a nice little ascending triangle in the short term, cup and handle in the long term. All of it leads to a really clean trigger right there above 48.76. Keep an eye on Bro. If it does break out, this technical chart gives a little bit of a long-term consolidation. We should see some fairly decent price appreciation on a potential breakout. Pays a dividend, and you can write covered calls on Brown and Brown as well. Plus, who doesn't love the symbol Bro? Everybody loves Bro.
I like Bro.
Everybody loves Bro. But keep an eye on that longer term consolidation on Bro. Could see a really good environment above that 48.76 after we're through with earnings, and a fairly positive response from an earnings perspective with both the EPS and revenue numbers. Still Dynamics, Tackle 25 stocks, Still Dynamics here, showing a little bit of longer term consolidation between 40 and 35 on the weekly chart. Looking at this on the daily chart, you're seeing slowing momentum in the trend. Real good trend here over in the fourth quarter of last year. Still Dynamics up 25% for the quarter. Once again, a little bit of a show me. When you're up big coming into an earnings report, a lot of times you can have a fairly decent earnings report, still get sold off because of the price relative to the price performance that quarter. Seeing a little bit of that in Still early on today. Has not violated support yet, still kind of in that range of support right there at about 38 to 38.5. Still Dynamics comes in at 51 cents a share versus the 47. Revenue came in at 2.3 billion versus 2.2 billion on the expectation. Revenue did decline 7.9% year over year. I know Still Dynamics, a popular company to trade, popular company to cash flow. That's how we like to approach Still Dynamics. It is one of our still companies we do have some belief in there at Tackle Trading. Got to hold that 38 handle from a support right there. South of that's the 50-day moving average. We know what can happen underneath that. 200-day gets in line real quickly here. So keep an eye on 38. Right now, nothing to see. 38 breaks. Might be a little clean air to the downside. So if you do cash flow on this, keep an eye on that 38 handle.
Mm-hmm.
And that's the two earnings I had today, T.
Still very excited about Still in general and the infrastructure play this year. Obviously, got some interesting cash flowing on this company. So appreciate you bringing up and analyzing that one. Marky, I think we're going to get to it right now. Eagerly anticipating this. You got a couple that you're gonna be talking about here in our pounding pennies segment. Is that what we're calling this here, Mark? Pounding pennies.
Pounding pennies.
Okay.
Pounding pennies. I got 5 for you. All right. Now, when I say a penny stock, and this is going to be very academic. you know, technically a penny stock is something that's not listed on a major exchange, that blah, blah, blah. I'm just talking about cheap stocks that are $5 or less, somewhere in that range. All right. So just to set the parameters of what we're talking, these are cheap stocks,
I've always defined it that way, by the way. Anything under $5, penny stock.
Yeah, I mean, so it's just cheap stocks, right? Got a couple easy traditional plays in the silver. To pull up AUY, you know, a lot of individuals, because not everyone has a big account, and so we talk about exposure to gold. Old Yamaha Gold is a gold mining company. Now, if you pull out a bigger, longer trend here, you got some pretty good support. And so when individuals do not have exposure to gold, maybe they don't have a big count and they're looking for a little diversification. You know, I think of Yamana, I'm probably slaughtering the name, Yamana Gold, AUY, very, very liquid gold mining company. The options, if you go to an option change, you're usually dealing in the penny. You have weekly options on this. I think fundamentally gold mining stocks are cheap. I think gold is going to go up. I will have a portion of my portfolio in gold from now to the end of time, until, you know, unless we somehow magically in the future become fiscally responsible. And so when I look at adding something that I fundamentally believe in, the chart's ugly, right? It's not pretty. We don't got any momentum. But I look at, you know, maybe adding some in that $5 level, either, and cash flowing it, since the chart right now is on gold itself is very cash flowy. Any interest in Yamana in the $5 range here?
You know, I like the concept of a gold mining stock, obviously, in people's portfolios, and whether you play GDX or gold or other different versions in gold. I like other miners better than Yamana personally, but I could get behind and understand why somebody would want to hold a gold mining stock long term if they're wanting to cash flow. Now the chart is obviously below the MAs. You're sitting on some support. We're trying to hold that. Got earnings coming up here in about 3 weeks. It would be a wait for me, but I'm open to why somebody would be interested if their position sizing rules required them to play something like this for cash flow. Matt, what do you think of Yamana here? I don't know how to say the name either, Mark, by the way.
I'm a
so.
no. Yeah, I'm a no on Yamana. Very simply put, I got it performing slightly underneath the sector in both its trend, its pattern, and its support bounce. And so if you're going to play anything in the gold, you probably just play GDX over Yamana.
What about someone that has an account under 10,000?
Okay, and that's the second thing I was going to get into. If you're looking for a lower dollar account and you're looking for a stock that's underneath $10 in the gold area, there's not, I mean, you don't got a lot of them out there. I mean, there's just a relatively few, and most of them are in the micro cap miner capacity. So you're going to take a little bit of risk there. You know, we're not talking about the Newmonts and the Barracks of the world at this point, right? I mean, that's where it starts and finishes for me with the gold miners, quite frankly, until you get to the GDXs, Newmont and Barrick. I mean, it's those two, it's everybody else. But if you're looking for that play, say in that $5 range that kind of fits our not pinching, but pounding pennies type of philosophy here, I'll one up you on AUY and give you a GSS here. You know, $3.5, $4 company here. I like the 200-day moving average bounce a little bit cleaner here. Yamana came underneath that, showed a little bit of relative weakness. GSS is relatively strong in comparison to the sector. You got a double bottom type scenario right there on that 200-day as well. Plus, you got a nice little double top right there at $4, slight south of north of 4, maybe 404. Give you a breakout of $4 here on Gold Star, which is a gold miner. Give me that a little bit more than Yamana right now. I like the game here. Barrick and Newmont are kind of my cup of tea there. But if you're going to play this, you know, $5 range type stock, I like the breakout of 4 with the relative strength on GSS over Yamana.
Yeah, the only problem with GSS, and if you're just going directionally buying it for whatever, that's fine. The option liquidity on Yamanabe is
Well,
like
that's the game. We're not playing your little tricky options game where you can offset any risk and always be right. That's
I know
not what
it's a
we're
great
doing.
it's a great game.
No, it is not.
All
That's
right.
not what you're doing. It's price appreciation day. That's pounding penny. What are we doing, Mark?
Oh,
People don't buy a $3 company so that they can cash flow, bro. They buy a $3 company so it goes to 12. Come on.
they're not doing it right. Well, that's why they do it. I get it. All right. Same lines.
All right,
Hecla Mining.
but to the community, AUI or GSS. Got to have the community play.
They listen. I like both options. Let's go to silver. If you want a similar play, silver's had a little bit of outperformance on gold. If you go to /SI, when you look at silver, they traded along the same lines for a long time. You didn't have as deep a pullback. You had that big sell-off on metals on that Friday. Pullback wasn't nearly as deep on silver. There's been some, a little bit of relative strength, comparatively speaking. We go to ticker symbol HL, Hecla Mining, little silver mining company. Same general philosophy. Now, same general philosophy coming down to a general support level. If you were going to play a silver or mining company right now, where would you go?
So they do both gold and silver. So they've
It's
got
primarily gold.
Yeah, this is
Helka's primarily gold. I'd rather take the GSS chart
like
over
GSS.
the GS chart. I'm sorry, it's infinitely cleaner than this hypothetical $5 bounce off a negative reaction to price. The GS chart has a double bottom, double top with a clean trigger above 4. So no, I like. If you're looking specifically in silver, I mean, you don't have a lot of options here specifically in silver. The strongest silver chart in the market is probably AG versus Majestic Silver. And again, that wouldn't fit our game we're doing to buy, buy that $5 company and whatnot. But AG is the best chart of the bunch. And it's not close, but again, you're buying at the top end of the channel. Underneath $5 or in that $5 range, you have ASM. And again, these are just primarily silver charts. You got the ASM here, and Vino Silver and Gold Mining. You got to, and again, there's no consistency here. And we're talking about a stock that truly is a penny stock here. But, 50-day moving average bounce maybe on ASM. EXK would be another one here, very similar here. Although I think you like this above 480 is where I like it here. Wouldn't be buying the dip on these, not when it comes to price appreciation. I don't understand that. You want to see the strength here, and so I like it above 480 if you're looking at a cheap silver play there. You also have FSM, which is in that type of same type of ballpark here, but you're underneath the 50-day on that one. That's really your, and then you have SVM, also a silver miner here, SVM, and that's looking very similar to the gold chart. Honestly, I think if you're looking at this, you got that weird volatility nastiness on ASM, but you're probably looking at EXK with above 480 here in the silver market if you're looking at that.
Yeah, and out of the ones you just flashed through, that one does have options, so you could use them if you chose to. But it
has them, but
they're okay. They're like 10-cent spreads, not why you would be playing that EXK chart, but that one did have the one with options. So,
all right, the next three are three
90% volatility. Have fun.
The next three are three of my favorite plays in all areas of the market right now. Let's go to Real Estate Trust, AHT.
Now, which one?
AHT.
AHT. Okay.
AHT. So Ashford Hospitality Trust is a hotel REIT. That got beat up big time in the pandemic. There was worried about liquidity problems. Howard Marks came in and gave them a huge, gigantic basket of money to get rid of that. Now, if you look at the daily chart here, the one thing from a technical analysis perspective that I really like here is a little bit of a resistance pattern forming on the daily chart. You formed a bottom, came up. There's a pretty clear line of resistance here over the last 6-7 trading sessions. Love it from a long-term perspective play, from a long-term cash flow perspective play. But I also think that there is some relative juice here with the financing deal. And if you get a breakout of resistance, nice little bump today, 20 cents bump. There's a lot of momentum and steam building on this company on message boards everywhere right now.
They're gonna turn a $140 million company into 140 billion. I mean, what are we
maybe
doing?
not 140 billion, but
It's in a
there
micro
is,
penny stock that nobody cares about.
I think there's sentiment building. I think there's a clear
Give tackle trading 5 years and they'll have a bigger market cap.
I think there's a clear technical. This is a tough audience.
No,
Yes, it is, bro. Yes, it is.
But this
Yeah,
thing
is it, you're just gonna what do you expect? You're just getting agreements on trash companies? Like,
but it's not trash. Listen, there's a lot of money.
no,
being
it is.
made in
It
this
is
area,
fundamentally it's a trash company. Like,
you know,
yes,
like
it's
and
a
if you go
micro
out,
stock, penny stock that nobody's ever heard about. Yes, it's a trash company. Doesn't mean it's not going to go to 5. That's not what I'm saying. But I don't know. Like,
is the plan here basically they got financing? You think they've avoided bankruptcy and now they've got the potential to run? So
yes,
it's a pure
absolutely.
spec play, because I don't see anything chart wise.
No.
I don't see anything fundamental wise. So it is basically around a
it's
bet
a
against their
message board.
bankruptcy.
It's a message board play, is what it is. No, I'm an out dog.
No, and plus, like if you go out to the March options, if you wanted to take a more conservative route and sell naked puts, pretty good liquidity on this stock. And that's the one thing about a lot of these penny stocks these days is the liquidity on some of these. Like if you pull up the March options, the liquidity on these companies is really, really, really pretty decent. And so, I mean, you have tight spreads. It's funny because back in the day, a year ago, liquidity used to be a hard problem on a lot of these companies. You'd have wide spreads, which wide spreads on cheap stocks are just a mess. You got pretty good liquidity on the option chain, naked put style, lower your cost basis. I don't know. I love it. I love it. I love AHT from a cash flow perspective over the next little while.
So the reason you're loving it is just because you believe it's got a floor underneath it that you could still cost average down if you had to. But that's
Yes.
Yeah.
You got $2.50 spreads in the options market on a $3 stock. You're going to have the price at the right range just to even do anything in the options market.
Yeah.
I'm an out. It's an obvious out for me.
It's a pass for me. Yeah.
Well, I love it. Absolutely love it. Let's go to another one that you're going to reject. SOS.
Oh yeah, that's rejected.
SOS. This thing has a lot of potential, and I'm not going to get into the whole gambit of what they do. They're not just a Bitcoin miner, but they did recently buy a huge chunk of Bitcoin and Ethereum mining rigs. This thing has a lot of juice, in my opinion. What do you think from the short-term technical perspective?
It's one of the most garbage worst charts I've ever had the pleasure of looking at.
It's nasty neutral, just hanging out in the long-term range.
Volatile neutral. It's craziness.
And you've seen massive volume start to come into this company from any level of historic. And one thing that if you look back on over the last year on cheaper stocks, that when you get volume surges, they usually tend to predate big moves down the road. The interest in this company is picking up tremendously. A lot of people on message boards looking at it from a cheap way to play Bitcoin without having some of the exposure of what the now more expensive miners are going to be.
But here's my problem.
This is not a cheap way. Wait, I want to make sure this is very clear. This is not a cheap way to play Bitcoin. Simply because you see price action and that's how you judge the value of something does not make it expensive or cheap. Simply because you buy 1,000 shares of a $2.50 company versus 100 shares of a $22 company. No, it's all relative to the amount of position size you have. And so, no, like, why does anybody think they're getting any proper value on this? Like,
Well, and not only that, I mean, if this company really does have exposure into Bitcoin and whatnot, why is the price stagnated for so long and not actually been able to catch anything?
And why does that have a 300% range in net neutrality? Like,
Here's
no.
a cheap way to play Bitcoin. Play it with how much ever money you have that you want to play it with.
You
You
can
don't
micro
have to
share
buy a
Bitcoin.
whole Bitcoin. You can buy
Like, you can
$100 of
buy 10
Bitcoin.
cents of Bitcoin,
You can
guys.
buy $50 of Bitcoin. Yeah.
It kind of works like other currencies. They go in cents and dollars, and wow, we even get pips, guys. Just wait till you learn what a pip is. You won't ever have to play this trash.
Yeah, I'm a no. I'm a hard no. This is the hardest
Oh, this is
no
a
out of all of
hard
them for
no.
me. But okay.
I
You
love
know,
the play. My final one that you're going to hate is AMC. Now, I have to apologize to my brother Tim. He said that he saw some news on AMC in our pre-production show getting financing. I was like, oh, that came out last week. This was a new batch, Tim. I have to
Okay.
apologize
It was the
to
new.
you.
The 900 million was the new batch.
Yeah, because they only had secured a couple $100 million last week. AMC has been the worries on AMC for going back 9 months has been bankruptcy.
Yeah.
And bankruptcy. So anytime you had a run on virus, AMC would go up, but then immediately sell off because there was this huge, massive. It's why I like Cinemark better, because Cinemark's liquidity is amazing compared to AMC. Nice little breakout on Cinemark to start the week there.
Been on that $20 breakout on Cinemark.
And so AMC, one of the problems with AMC is that, this bankruptcy hanging over the head, the 900 million is a massive get, which, once again, down the road, long ago, the combination of the financing that they got last week, the 900 million, and their ability to sell shares, which they'll do, make no wrong, AMC flies up to $6-7, they're going to issue a block of shares to dilute the company more, but it does provide more liquidity. And this has been a big thing ever since the March lows on companies. Can they stave off bankruptcy? This is like on Carnival or airlines or this is that. As long as they could stave off bankruptcy at cheaper levels, it's been worth a gamble. Now, the option chain on AMC is extremely liquid, almost to the penny on most options. Massive volume. What do you think about naked puts on AMC at lower levels?
Well, I'll go first. Out of everything that we've just looked at here, I mean, there's some interest in some of those gold miner stocks that Matt was flashing through. You could find something there. Obviously, like I prefer other gold miners though. Some of the other ones I'm just not into. Out of all of them, there's at least a pattern here, right? I mean, this is a company that has been fighting bankruptcy.
Oh, wait. Hold on. Out of all of them, at least this is a real company.
That's right. And it's got long-term support. It's trying to find volume has been picking up here the last couple of weeks, financing and funding and money coming into the company. It's only got a $500 million market cap. It just secured more money than its market cap. Out of everything you've shown, I have the most interest in this one here, Mark, for sure, for me.
Yeah, Mark, I can get behind your AMC analysis on this one. You got a pretty solid double bottom, triple bottom right there at $2. And I mean, honestly, if we ever get down to $2, I think all of us should think about buying it at $2 and selling it at $4. It's got a pretty simple pattern there at $2. So if you're looking at a naked put, and I'm assuming 25 days out on the monthly mark, February.
I mean, heck, you can get good premiums on the
$4.
$4.
I mean, you can get it in 4 days out right now. But
right now, you can get good premiums at the 4 or 350. I mean,
that's a real. I mean, that's 10% on the price, guys. 30 delta. I mean, yeah, I see it, but I'm going to go standard out. Let's do, say, a 3 delta contract. Man. Let's go. Let's see a little bit more here. So if I do the 2.5, you're getting it above the 2.
Mm-hmm.
You do the 2.5, you can get 20 cents. Yeah. Oh, it's definitely worthy of a naked put. If you're looking at that $2 mark, and you're saying, you know what, I don't care if it goes in the ballpark of 2. I'm going to take the risk. Then I like the 2.5 put option. I don't like the 2. because the 2 just means you're going to take possession. And if it gets under 2, it could get ugly. So you don't like that. I like the 2.5. I could see the 2.5 here.
At 2.5, if you pick up 20 cents, that means your cost average is 230. If you take delivery, you could sell cover calls, get it down to 2 over time. If you
Too much,
believe
your
it,
break even anywhere. Say you have to take a possession at 250 and you're at 210. You're 40 cents upside down. Offset the 20 cent on the cash flow. You're 20 cents upside. 1 month, you're offsetting that risk. That's why I like the 2.5.
I can get behind this, guys.
I like the 2.5. Now, I also do like it a little bit directionally. Right? You are seeing a double bottom here. Nice little W formation. You see the top end of the formation here. Now, just let me paint a picture here, because if this thing just runs, I mean, people like me are going to miss it.
Yep.
We just are. That's just who we are. We know our drawbacks. But if you give you a little consolidation between 4 and 4.5 here, like just is it too much to ask for a couple weeks of consolidation?
Set it
That
up.
too much? I know this is Mr. Market in 2021 and everybody's popping out of the money call options like they're smarties, but couple weeks of consolidation, then break out of 5. Ooh, that could get saucy there. Yeah, I like the 2.5 naked put if you're looking at a bottom up approach. If you're looking at breakout price appreciation of 5, give me a couple weeks of consolidation. That weekly chart looks pretty saucy. And CNK, Mark, I mean, Cinemark, this is what I'm talking about. This consolidation here. Here's AMC. Here's what you need. There's the breakout. Cinemark, good round of funding for AMC. Congratulations. I'm glad for that. Nobody wants to see AMC go bankrupt, actually, legitimately. But CNK is just front running a little bit. I honestly think the directional play is to wait a little bit on AMC. If you're going to play the directional play on the Cinemark or AMC, you got to like a $20 confirmation trigger on Cinemark right now. Give AMC a little bit of time. I do like the naked put on AMC, and I like a little bit of consolidation on price appreciation. Cinemark breaking out right now, 20. That looks pretty, it's volatile, but it looks pretty saucy.
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 I like it.
I just miss Cinemark at $8 when I loved it. I hate it when things run away from me.
Oh, it gives you anxiety when you see stuff.
Listen, to make money. But
hey,
I got
your
AMC
entire
now.
philosophy of looking everything from the bottom actually means they have to go up eventually, Chucky.
I know, but I just like to have a few extra months. I like to hold on to them as long as I can.
You want to see the
run.
world burn just so you can pinch some more pennies?
Yeah, and so like my little beloved AHT, this is up 3% since I started talking about it already.
Later on today, Mark will be outside by the railroad.
See, one day AHT is going to be at like $7, and I can't mess with
it.
One day, now that it's at $280,
it's going to be bankrupt and zero, and nobody's going to know about it because nobody cares about the company.
Oh no!
Like literally, it's a tree that if the tree falls in the forest, does it really happen? That's HT when it goes bankrupt. Nobody will know, bro.
No, there are a lot of
It's a
company does not have that level of
somewhere.
option liquidity on a chain if people don't care about it.
Dude, you need to get off those message bros. I mean,
listen, I love my little retail traders out there.
By the way, our buddy in the chat, Bro Truth says this is comedy gold. Please keep pinching pennies as a permanent
if you want to see Matt and Mark approach markets, this is the segment to do to how Matt and Mark approach things.
And I think we ended on a good one there with AMC though. So let's start wrapping up this show. By the way, the markets are recovering here intraday a little bit, kind of hanging out near the flat lines almost at large. Let's start getting some final thoughts. Some things we're going to do today. We're podcasting today.
Jonathan, he does. Yes.
Right. Yes, he does. Yes, he does.
You don't need to catch up on the conversation. You just go, bro.
Catch it on. But anyway, let's start getting some final thoughts here. Back on the S&P while we wrap the show up here. And let's go with you first, Mark. How are you reading the market this week? What message do you want to give the community out there? Anything?
Listen, we're week 13 into the most recent run. I did actually on the Mind of a Trader last night on Sunday night. We went back and looked at since election of 2016. One thing about trading is you can have these really long, nice bullish stretches. This is the 8th stretch we've had of 10 weeks or more by the the technical calculations I did, and some of these stretches can be really good. Trading's amazing, and you can have some really, really long stretches. Eventually they end. You never try to guess when they do. You might end this week. You might end 18 weeks from now. You have zero idea. So we stick to our technicals. We monitor support levels. We monitor breakout and resistance levels. We monitor the trend, and we just trade responsibly and make money in these stretches. It's been a good environment for 13 straight weeks. I don't know how much long, but I'm not going to be over leveraged at any point going on. I'm going to be responsible. I'm going to be happy making money. Just be responsible as you do it.
Yeah. Yeah. Matt, final thoughts from you?
If you guys enjoyed pounding pennies, you would enjoy every conversation me and Mark has had for the better part of 4 decades, because that is it. And but I love it. I love different approaches and different perspectives, because none of us have, our finger on the pulse of everything out there. And Mark spends a lot of time in the underbelly of the market, and the underbelly of the market has done fantastic, and honestly, it's outperforming the broad market by about 40%. So, you got to give credit where credit's due. And, I personally thank Mark for, being the guy that enjoys diving into the underbelly of the market, because the underbelly of the market sometimes feels like the underbelly of the internet. You don't want to go there sometimes.
Mm-hmm.
And so I do appreciate Mark bird dogging out there. Even if most of what he finds is trash, it's called the underbelly for a reason.
It's trash that makes cash. Oh, that's a great name for
trash
the segment.
That makes
That's
cash.
a great name for the
That's
segment.
the name for the segment. Nailed it. Mark nailed it. Trash that makes cash.
Fantastic.
Let's roll.
So HT up 10%. I love it. Listen, the thing about it is, and the one thing, when I look back on this years and years from now, when I monitor these conversations and try to get a feel for where people are building sentiment, they're not the most intellectual savvy conversations I've ever been privy to. But listen, force of will, man, force of will.
Mm-hmm. Mm-hmm. And my final thing here, guys, Matt, you did a really good job detailing earnings earlier in the show. I thought that was fantastic. And guys, we've got 115 companies that report this week. We have a market here today that's holding on. We've got a nice trend. We've had some run up into these earnings, but we have eager anticipation around some of these big names. It's not just one sector. It's not just one grouping of types of stocks, broad based. So pay attention. Pay attention. Come back and join us on a daily basis. Make sure that you're analyzing these markets day to day to see if anything's changing, adjusting, and if we can learn something from these earnings reports. After this week, we got another busy week next week. But what it does, though, in a week like this is it gives you enough data to start to get a feel for how the market is reacting to earnings in general. And I'm looking forward to it. Apple on Thursday is going to be the big one. So definitely.
Any guesses? Gap up?
Because
I'm going to ask you this on the podcast.
Okay, I'm willing to take Apple over under at 5%.
Because I'm fascinated.
Under 5, I think it will be under 5.
I'm gonna say right at 5.
Yeah, it's so chalk on that all the time.
It's chalk. Apple's chalk.
It's been chalk for years.
And I will, because it's a growing market. I will say up based on probability, but I will say it comes in close to 5. I do think they do achieve the 100 billion mark.
Mm-hmm.
And typically, when a stock market achieves some random arbitrary number that we just give credence to, they usually celebrate these hypothetical, anniversaries of random things we make up. So I think they celebrate it. So I'll go gap up. Less than 5% though.
Here, I'm going to do my best message board. Over 5%. Are you crazy? To the moon.
This is what I have to do every day of my life. Mark living on message boards and that influence on me. I really enjoy it.
To the moon. Everything to the moon.
It's a good thing I got the stubbornness of a donkey. Would it be a donkey, Tim?
Donkeys are stubborn. Yeah.
Would it be a donkey? It'd be a donkey.
Yeah. Donkeys are stubborn. That's our show here today, guys. We are done. We're going to go podcast. We're going to be putting that out on the website and on your favorite podcasting app.
Earnings as an investor, not as a trader, not the volatility builds and volatility crashes. Not just very simply, a very simple question. When you are an investor around earnings, how do you approach it? Do you buy insurance? Do you call it, or do you leave it uncovered? Do you let it go to the moon? However you young
No, it's just seriously
bucks
like
say these days, Mark.
I don't know the tone. I need to hear somebody young how they say it, because on the message
YOLO!
board, it's always to the moon and there's spaceships.
YOLO!
But it's everything's to the moon. That's the calling card.
Good.
I want to know the tone in which they say it, though.
They don't say it like that.
I don't.
Well, I know. That's why I want to know the
They
tone.
don't get that subtle, sexy voice there, buddy.
Hey kids, how do you
Hey,
say your
hey,
jargon and
kids.
slang?
Yeah. How do you? This sounds like a Dave Chappelle skit right now. Hey, kids. How do you say going to the moon?
To the moon. All right, guys, we are off to the moon. We'll be
I know
back tomorrow.
Coach Christian would say it. Cocaine and hookers, my friend.
To the moon. To the moon.
Wall Street.
Yeah, that's right. Yeah, and Matthew McConaughey. Yeah,
Oh.
do the whole thing.
Ooh.
Are you gonna do it?
Oh yeah. No, I'm not gonna do it. I can't do it as well as
Are
Christian.
you gonna do it?
I got to do it late at night and act like it sounds good. No,
Sure.
Christian
sure.
does it good.
Okay. Subscribe, click the bell, join us tomorrow. We'll be back live, same time, same day, each and every day this week, guys, 12:30 Eastern Standard Time.